In this video, we explore Benjamin Graham's timeless principles of security analysis, designed especially for the lay investors seeking clarity in a complex financial world. Security analysis is the backbone of intelligent investing. While financial analysis is broader, covering policy decisions and economic trends, security analysis is more focused. It evaluates individual stocks and bonds to determine their intrinsic value and safety. The security analyst studies the past, present, and future of a company. They dissect earnings reports, assess financial strength, highlight risks and opportunities, and forecast future earnings, sometimes based on assumptions, sometimes as a best guess. Here's a paradox. The more you rely on mathematical models to predict growth, the less reliable they become. Why? Because growth projections are often based on assumptions that are easily derailed. Even a small miss in earnings growth can drastically reduce a stock's valuation. Graham's advice to non-professionals? Learn the basics of what analysts look at, and more importantly, be able to distinguish between sound analysis and speculative guesswork. When it comes to bonds, safety is measured using interest coverage ratios, how many times a company's earnings cover its interest payments. For example, industrial firms should cover interest charges at least 7 times before taxes and 4.3 times after taxes. In addition to earnings coverage, analysts also check size of the enterprise. Larger firms are usually more stable. Stock-to-debt ratio. This shows how much cushion exists for bondholders. Property values, although less relied upon today, they still matter in real estate-heavy sectors. History supports this method. Railroad bonds that pass strict safety tests often survived economic storms. Meanwhile, over-leveraged companies without adequate interest coverage, like the New Haven Railroad or Penn Central, faced bankruptcy. Graham's conclusion is clear. Investors should focus on tested standards of safety, especially earnings coverage and financial discipline. The more you rely on rosy forecasts, the greater your risk of disappointment. Security analysis isn't just for professionals. With the right principles, any thoughtful investor can make sound, evidence-based decisions and avoid the traps of speculation.